Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 15th of Feb. All right, as we come into Friday's Asian session, we've got a good 24 hours of trading coming up. But just having a look at the major charts here, you can see the Aussie is pretty much stalled. The Kiwi stalled after the RBNZ the other day. Now, dollar yen's drifted lower. Euro is sort of stalling and back trading sideways, still in that sort of downtrend, but not a lot going on there. Sterling's lower than where it was yesterday, and you can see a bit of wild activity on dollar CAD with it shooting up through that resistance line just above 132.85. Now, what you need to do is not just sort of look at where the arrows are and what's going on. This is a good example of piecing together what happened and why the currencies are exactly where they are. Now, if I just bring you across to the main page, and there's a couple of different things here. It's clear as day what's going on. Now, you can see the US dollar uptrend. Let me just get that a little bit bigger. Where's that pen? So the US dollar is sort of just cruising to the top side here and has, if anything, it's started trading sideways and just drifted a fraction lower. It's still in the uptrend at this point, but the uptrend has stalled. Now, what was that from? Well, clear as day, we had US retail sales figures out, and the month-on-month numbers were quite terrible. Okay, real big outside the general range of forecast. If I just clear those charts, you can see that without the autos, it was minus 1.8. With the autos, minus 1.2. So basically, the retail sales figures suggest that, no one's buying anything, which, going forward, that's going to lead into lower inflation, et cetera, maybe even weaker employment. So we've got to see what's going on. Now, there were... the devil is in the detail, I should say. I said there were some other numbers here, the PPI numbers, which, the market does generally focus on the negative side of things. There was, excluding food and energy, slightly higher. The general PPI numbers were pretty much as expected. Okay, the month-on-month slightly weaker, but the weak retail sales figures was the main reason why the US dollar slowed down across the board. Okay, so then you come back to your charts and you can actually understand and you know why the Aussie is traded sideways. We're lacking direction out of the Aussie itself. Now, the US dollar has come back to sort of a neutral bit of stance, and that's sort of has the Kiwi as well. I'm surprised the Kiwi isn't a little bit higher, still following the RBNZ. But you can see the weakness in the dollar here on dollar yen, and it's drifted through the cloud as well. Should probably come under a little bit of pressure. I'll come to the news in a second. Brexit is the main culprit there for sterling, but this move back up to test the trend line in euro is all around this weak US retail sales figures. So it gives euro a bit of breathing space. Now, what do we got here in dollar CAD? Well, once again, the devil is in the detail, and the numbers just tell you exactly what's going on. So when I have a look at the numbers here for dollar CAD, manufacturing sales is a really big number. It's chunky. Check out this week number, minus 1.3 versus plus 0.2 forecast. This is another weak Canadian fundamental number. Now, the fundamentals in Canada are starting to build up into a big level of weakness. Even the revision was weaker than last month. So that puts last month slightly worse, and this month minus 1.3. So if you add these together, the variance here from the revision, which is 0.3, you got like minus 1.6. Now, that's huge in the big scheme of things. And then you come back to dollar CAD. So you would be selling CAD on that situation. And that's exactly what's happened here. So you can see that huge move up on dollar CAD. That is all about triggering the stops above that level. Dollar CAD shoots up. That's factored into the market. It comes back down and tests the market. And it's sort of gravitating towards that trend line. But you know what? It's going to get a little bit messy from this point. With those numbers, oil, continues to rally. So that suggests dollar CAD goes down. The fundamentals suggest it goes up. To me, that is a classic situation of once this settles down, we'll be back trading sideways dollar CAD. So the answer, right in front of you. If you understand the fundamental aspect of the market, you will understand exactly what's going on at this point. Okay, so just having a look now, just to come back and just give you the answers to sterling. Now, if you just come over and have a look at the news, this is where you're going to find all the crazy Brexit information now. Pound weakens as PM May loses latest Brexit vote. Now, apparently this was some sort of symbolic Brexit vote in Parliament. she's been voted down again, and that's enough to really give sterling another real good kick in the guts. Now, this currency, I tell you what, I know there was a bit of euphoric rally there not long ago, but everything that's coming out now suggests that UK parliamentarians don't want a deal. They just want to go rough and ready. And this thing looks, you can't deny it's going down. Okay. Now, we have had about 5 or 6 negative things in a row, some negative fundamentals. This week, we've had negative, Brexit updates, and now this latest vote. So sterling on its knees. Where does it go from here? Well, to me, once again, it could go down here somewhere at around 125, or it could pop back to 130. Okay, it's really speculative at this point. Massive. It's almost like going to the races and betting on the horses without a form guide. All right, so for me, that's not a happy trading situation at all. All right, so we've got the charts there, right? So what you would be doing is basically just adjusting your trend lines accordingly. Now, there's not much to do. At this point, I'll leave dollar CAD where it is. The Aussie and everything else is exactly where it should be at this point. Okay, so then you come back to, as I said, it's about preparing for the day ahead. You come back to, look, just keep an eye on where the dollar index is. If I just bring you back to the dollar page. Now, you'll see here the dollar index, without sort of getting carried away with some of the news articles, like dollar drops, okay, is one of the big headings here. Dollar drops after retail sales data suggests US slowdown. Yeah, it's a slight pullback, but until this trend line breaks, okay, it's still going up in my eyes. It's just a bit of a sideways trading activity. Now, what you'll find is too, if you've been following the market, I mean, equity markets up here pretty neutral, so no sort of big impacts on growth, no US-China trade issues or trade talks or trade updates. What we have is without any sort of activity from China without any local Asian data, the Asian session has been very quiet. Now, it will kick off as soon as we get more updates from China, but the dollar yuan, the offshore yuan, is now trading sideways, suggests to me the market is ready to wait for updates. Now, 1st of March is the deadline for all these things to be agreed between the US and China, so it is going to get a little bit more intense from here, I would expect. And we do have a huge amount of key Aussie data next week as well. All right, so today, what are we looking for? Well, you just got to follow the trail. We've got the major currency pairs. The wind has been sapped out of the sails of the US dollar. So when you come back to the MyFX Trading Hub, we still have pretty good trading conditions. Going back 6 months or whenever it was when we had all those geopolitical events, well, they're not around just at the moment. They're simmering. So trading conditions are pretty good. Okay, if we just scroll down just a touch further, what you're trying to really match up is trying to find the currency pairs that do have some level of direction and look for opportunities to get into those trades. Now, the US dollar, well, the rally has stalled, as we've seen, but we need another follow-up of some data to see what's really going on. We're going to really wait till Friday afternoon in New York, the prelim University of Michigan consumer sentiment numbers. Check out these numbers. They are a good historical number and will move the market if there's significant variance. Just note, you can actually hold positions through this number. Okay, it's not like a high impact like non-farm payrolls. But so outlook at this stage, well, the US dollar is just hanging on to a slightly upward momentum, and that has the euro just hanging on to that sort of bearish downside momentum as well. Sterling, well, it's anyone's guess, but at the moment it is going down, and dollar Swiss is just hanging on to the resemblance of an uptrend as well. The rest of these pairs here, okay, dollar yen, dollar CAD, and the Antipodeans, Aussie and Kiwi, to me, trading sideways at this point. So what are we looking for today? Well, the Asian session is going to get a little bit of a kick in the belly from some Chinese CPI numbers. Now, what we've been looking at is the Aussie and Kiwi. They do have historically have a very high correlation with the yuan. But you know what? I'll probably be looking to trade dollar yuan on the back of this, and it's set up nicely technically, just trading sideways, waiting for this data. So that's going to be an interesting one as we go through the Asian session. And then as you come into the European session, UK retail sales are due, right? Now, once again, momentum is to the downside. You know, I usually go with that, but a lot of the bearish momentum recently in sterling is all geopolitical. So it's going to be pretty loose, okay? And you know what? If these numbers come out strong, who's to say it doesn't go up? It's going to be a tall order when there's so much pressure on the downside from the geopolitical side of things. So to me, weak numbers probably looks like a good opportunity, short term at best, right? Expect more media updates as we go forward. And then, as I said, we've got the University of Michigan numbers coming at the end of the week, all right? And that takes us into the close of trading for this week. So there's a few opportunities left. If you haven't made your cash yet, don't go chasing the market. Look for the opportunities. And at the moment, they are a little bit few and far between. Sterling downside goes with the general outlook for sterling. The Chinese CPI numbers could be a bit random, but if there's variance, this thing could go up or down. So just keep an eye on that as we go through the Asian day there as well. Don't forget the 247 trade zone, plenty of updates. Whether you're looking for educational components or trade ideas, don't forget to check that out as well on the right-hand side of the website. All right, guys, that's it from me. And actually, just before I finish, I was going to say there's loads of activity next week, loads of high-impacting numbers, like a huge amount. So start preparing for next week. Have a look at the days where the key events are coming up. This is where the movements are going to come out. And like I said earlier, you know, the answers to where these currencies are going and where they've been is all in the fundamentals. So make sure you spend a little bit of time understanding these things so then you can work out where the pressure points are and where the good opportunities are going to be. All right, Euro is still in that downtrend, but it's going to be pretty interesting as we go through get towards the end of the week. It may see a little bit of a clean out to the top side. All right, guys, that's it from me. I'll see you in the 247 trade zone. Cheerio.